Hello, all of our attendees. Thank you for tuning in. And today, Willie and our dear friends here will be sharing about the Q2 2022 landed market analysis. So, will the power balance between buyers and sellers start to finally change? Okay, so on to the next slide. Yep. So here is Willie. He's a Huttons District Director, the head of the Huttons Landed Division. He has graduated from NTU with a business degree, and he has more than 10 years of real estate experience. And this Huttons Landed Division has been founded and is one of the most prolific landed teams in Singapore, which has transacted more than 200 landed properties. It is a multiple award-winning producer and leader, including 10 consecutive top 100 annual producers and millionaire producer in 2021. Willie is also featured in Money Mind and Edge Property. So from skincare to property and to landing his dream against the odds, Willie has beaten all the odds and many of the odds to come to achieve to where he is now. So on to the next slide. Here are our speakers today. Michael Goh from District 16, Sindrik Goh from District 21 and 23, Will Ng from District 10 and 11, Jason Sen from District 13 and 14, and Sean Xiao, which is in charge of District 19, 20, and 28, and Justin Ng, which is in charge of District 15. Yep, so once again, thank you all for coming, and I'll pass the time now over to Willie.
Thank you so much, Keith. Good evening, everyone. Hi, my name is Willie. On behalf of my entire team at Huttons Landed Division, especially my district ICs, I welcome you to our second quarterly webinar of 2022 of this year. If you are new to all of us, this slide will be quite useful for you if you want to follow us in terms of our listings on our website, Facebook, YouTube, Instagram as well. Just feel free to just save this page, or you can just scan and follow us in our various social media. Right. So as mentioned, this is not our first webinar. We started this about 2 years ago in 2019 or 20 before COVID. But prior to that, actually, we've been publishing a lot. I think we are the one, if not the only team that publishes landed market results every quarter religiously. All right, because one of the main reasons is for us to be able to consult and to be able to advise our clients. I think it's important for us first to understand how the market is going. So for the past many years, we've been drilling into the numbers to better understand and, of course, help both buyers and sellers to make better decisions. Okay. So if you realize, okay, today, actually, after the past many attempts at doing Zoom, we actually wanted to try out a green screen, but if you can see me and my team now, we are separated. One main reason, because I have COVID now. So pardon my coarser than usual voice and certain, intermittent coughing, pardon me. All right, so because of that, we have to continue to conduct this in Zoom, all right? So this is the last session that we did for this year. And from last session onwards, we actually uploaded this into our YouTube as well. So if you have missed the last session, this is the QR code for you to scan. It's all uploaded on YouTube, all right? For those who have missed today as well, we will do the same thing, okay? Uploaded this after the webinar session is over. Excuse me. Before we start, a standard disclaimer. We just want to make sure all of you understand that while we endeavor to make sure that all our information is accurate as at 10th of July, right? 10th of July, all information we downloaded as of 10th of July. Anything that happens, basically information that comes in that may distort, we will not be responsible. And as much as we try to use this to guide our decisions, Huttons nor any of the presenters shall also be excused, all right, for any responsibilities. Okay, that being said, don't worry, doesn't mean that we're trying to shirk our responsibility. Okay, now the first thing is, I think every webinar today, let me see how many do you have. Okay, we have almost 100 again. So perhaps we can first try to find out if this is the first in this seminar. All right, this webinar. So Keith, you can help me to launch just a few seconds, help us to understand whether this is the first time.
All right, just give me a while.
So this will help us to better understand and whether I should elaborate on the previous sessions or not. I think so far, every session, besides sharing information for you all to learn, I think also the presenters, the speakers are also learning new things. Okay, so
Okay,
Let's just
so the
take a
poll is
few
up.
seconds. Yep. Let me see if there are more first timers. Then, okay, just 5 more seconds just to have a few. Okay. Oh, so it's quite good. We are seeing quite a lot of repeat. So we're standing about 57 and 43% around there, right? So 55% are first timers and 47 actually have attended our webinar before. Thank you very much, those who have supported us and find this useful. Thank you, Keith. We can end this now.
So here's the
Okay.
sharing of the poll. Yeah, over to
Okay.
Willie.
Thank you. So let's continue. Sorry. Okay, so today's sequence, again, those who attended before, you know it's going to be quite packed. We have altogether about 160 slides. Okay, so we're going to do as fast as we can. And that's after compiling and cutting down as much as we can already. So the purpose today is give you as concise as possible, starting with total market overview. After that, we'll go by a deeper analysis into the various regions, namely East, Northeast, Central. Pardon me, there's also West as well, Central West region. And also next, at the final part, we will talk about the main topic today, all right, which is the power balance between the buyers and sellers, whether it's shifting. After that, we will do a conclusion, and if there's time, we can also attempt to do some Q&A, all right? My list of panelists here will all be here, so if there's questions that you have, you want to ask, feel free to just type it into the Q&A, and then we can progressively help to understand, to address your questions. All right. Pardon me, I need to drink water. Okay, let's start with the total market overview. All right, for the second quarter of 2022. This is a recap. Okay, not from 3 months ago, from 6 months ago. All right, we boldly attempted to make a prediction on how the market is going to be like. And 6 months ago, we predicted that the volume would decline by about 30 to 40% and a more subdued price growth of about 3 to 5%. How do you think that has turned out? All right, for the first year. Now, the next slide will be important. Okay, as you can see here, this is a slide that shows many quarters of the total lender market in Singapore in terms of both price as well as volume. Okay, price as well as volume. So the blue line or purple line you see here is the progression of price. Okay, the price is expressed in terms of PSF, all right, per square feet. For those who have joined us before, you understand that we are not using indices used by certain media reports that use the PSI. Okay, they use actually a certain index. For us, we use PSF because it's a lot easier for our clients to understand. Because if you use a certain standard index like 110 or 165, people may not understand. All right. So, but what this can see here, prices have continued to rise in quarter two after a record-breaking performance in quarter one, which hit more than crossed $1,600 per square feet average. Okay, island-wide. So now we have crossed 1,650 and it's now at 1,658. Okay, at 2.5% growth. For volume-wise, the last 2 quarters we already seen almost halving. Okay, every quarter. This quarter, quarter two, has dropped more gradually by only 5%. Right, by only 5%. But if you compare this to last year, okay, to adjust for seasonality, of course, you can see the 5 quarters of tremendous growth during the COVID or pandemic season. This is actually half, okay, almost half compared to the same period last year. This is, of course, if you have followed our statistics before, this is quite an anomaly, which I will elaborate later. Because usually when prices or volumes starts to go down, you will see a downward pressure on the price as well. All right, this is where I think it makes the market a lot more complicated, a lot more difficult for us to digest than before. So where do the positives and negatives, okay, for example, the 2.5% and the minus 5%, where is it contributed? To better understand this, because this one is a accumulation of the entire market, okay, it's regardless of the various districts or the various house types. So to better understand, we have decided to break this down into the various house types. First, let's take a look. How does this mean in terms of terrace versus semi and detached, right? So if you remember, this is basically value. All right, with an increase of 2.5%, actually semi is quite flat. All right, and then you have terrace and detached actually going the opposite direction. Terrace have grown at 6.2%, and then your detached actually dragging the entire index down by minus 7.3. What is point to note, interesting note is that actually terraces and semi-detached have reached a record high, right? So now semi-detached have crossed 1562 now, and then terraces for the first time, all right, in Singapore's history, it has crossed $1,700 per square feet, all right? So if you're a buyer now looking for terraces and you see them to find, we still have buyers asking us, do you have 1,005 PSF? I think it's very difficult based on what the market is showing. Okay. Now, based on volume, remember -5%, actually semi-detached and terraces are doing relatively well, quite flat. Again, it is detached that is actually the main contributor to the decline. All this later we'll see because every segment is dissected further by districts. I'll come to that in a while. How about the freehold 99 as a freehold 999 versus 99 years? Okay, this is what another interesting question that a lot of our clients have asked us. So okay, let's take a look at 99 years. Okay, 99 years, the value is flat. Okay, it's flat after reaching a record high of crossing a 1138. Okay, it's flat and volume is down by 15%. What is point to take note is actually 99-year landed have actually reached crossed 1,000 square feet for almost 6 consecutive quarters. Our belief is that it's quite difficult for us for this level to drop below 1,000 from now onwards. Okay, despite lease decay concerns, a lot of buyers are seeing a lot of value in these properties in terms of the space that provides. Okay, one of the reasons. Now, volume is a bit of a concern because it's dropped by 15% more than the national average. One reason for this is due to a relatively lack of a supply in terms of houses being 99 houses being available on sale. Okay. Next, let's take a look at freehold 999, which makes up, by the way, about 80+%, about 83% of all transactions, landed transactions are made of freehold 999. So they are more representative of the total market transaction. So you see a +2% and -2% here. Okay, not very surprisingly. Next will be landed versus strata title. Now, strata is probably the weakest segment, all right, in this particular sector, because you see both value and volume dropping way, okay, more severely than all the other segments we've seen, okay, which is -11% for value and -56%. One point to take note is all the numbers we're going to show later actually excludes strata title because the percentage that it makes up actually is a very insignificant, still considered quite significant. But if you are thinking of looking or selling a strata or thinking of buying strata, you want more information, just come to any of us and we can drill into more data, okay, for you to understand. All right. Otherwise, please take note that these numbers do not affect the overall analysis that me and my teammates are going to show you. Now, another phenomenon is about new houses, okay, versus resale. We all know that resale, of course, in landed, it makes up the majority part. You can see, let's take a look at new first, all right? After hitting more than 10 units in the last few quarters last year, we have now gone down to less than 10, of 9 in the first quarter, and now only 7. So it's a smaller base. So the relatively drop, the 22% drop is not a big issue because sometimes for new houses, a lot of them, they are not TOP yet. So if the TOP is a bit, TOP period is way too long, it may affect the sellability. Okay. The value is something that's quite interesting. It has actually dropped by -12%, which is significantly higher. But if we were to drill down further into this 7 new houses, we will get to see quite clearly a higher percentage of the new houses sold in this quarter are actually in the suburbs. They are not in the central region or the prime area. All right. Whereas in the quarter 1, they are more in basically the central region as well as District 20, which commands much higher PSM. All right. Nonetheless, I think more than $2,000 per square feet for brand new houses is a benchmark that is here to stay, whether you are at 2003 or 2005. Increasingly, a lot of the houses that our team are marketing are actually veering towards 3,000, if not even above $3,000 per square feet. Okay. So resale, like I mentioned, this forms the bulk, so not surprising. This is actually almost 97%, right, of all transactions are resale, as compared to, say, condos. So resale forms basically will steer the direction of the entire market. So you can see plus 3.1% and a drop of 5%. All right. So in summary, this is the most important chart that summarizes all those that I've shared earlier. First is you can see from here pardon me. it's not working. So the plus 2.5% increase in value, okay, is mainly contributed by terraces, all right, terraces, the freehold 999 houses and resale, all right, the resale that helps to contribute to the 2.5. And for the drop in volume, they are mainly contributed by detached, 99 years, 9 houses, and of course, brand new hunts, even though the base is quite low. Okay, so this forms a very, very useful summary that compares or gives a very good overview, okay, across the various house types and segments. Pardon me. All right, so besides looking across the various types and house types and the tenures, another way to look at it is by regions and districts. This is always, these two charts are always very popular among both buyers and sellers because you want to dive a lot deeper into the various different districts. Okay, so let's talk about price first. There are many numbers here, so I'm going to let you look at the various numbers or various districts that you like. But you can see from here that the best performers are 13, 14, and 23. Okay, and 23, each recording double-digit growth in value. All right, especially you can see, let me just see later. Okay, I'll click on that in a while. And then worst performance in terms of growth. All right, not exactly a negative because they are all reaching almost near all-time high as well. Is District 28, minus 8%, 11, and District 16. What is interesting to note here is among the 11 districts, by the way, all the 11 districts here form, we call this basically our GTA, the main districts that we focus on because they constitute more than 80%, all right, of all the transactions in Singapore. The rest of other districts may not be analyzed here, like District 5, District 26. If you're keen to know, you can always come to us, all right? So back to these 11 districts, now you have C2, 4, 6, 7 of them, 7 out of 11 of them actually hit the highest record ever, all right, including District 10. Now average is will be 2,000 per square feet. District 21 as well, crossing 1,008. District 23 crossing 1,003 and nearing to 1,004 per square feet. And then we have District 13. Later I'll let Jason explain why it's crossed not just the 1,008 mark, but we're almost closing to 2,000. District 14 has crossed 1,006 for the first time, and District 15 has gone even further towards the 1,008, basically the range. All right, and even District 20 has also crossed 1,008 for the first time. Now let's take a look at the quantity. All right, transaction volume, right? Transaction volume. Here we have actually indicated another column, okay, just to compare for seasonality, okay, for between Q1, 2001, Q2 as well. So from here, again, I'm going to give you a few seconds to take a look. Volume-wise is basically just to, especially if you are a seller, you want to know why certain areas, how come your house is not sold, okay, versus, let's say, other districts or other houses. This will be very useful. Now, let me use, let's say, District 21 as an example, okay? There are 11 houses sold in Q2, okay? To see how your house should rank is quite simple. You mentioned there are like 20 houses on sale, all right? 20 houses on sale or 22 houses on sale. To clear all the 22 houses, you need 2 quarters, which is you need 6 months to clear it, right? That's how we read the numbers instead of just the prices, okay? So if that's where later I'll touch on the point of basically competition and how you stand with respect to your competitors. So the volume also makes a very interesting analysis as well. Okay, so from here you can see the best performers. Those who, again, not surprised, you realize District 14, 13, and 23 again are the top performers. Like we said earlier, usually when the transaction volume is high, it will help to push also the value to go higher as well. So this is another indication that supports this finding that we have seen. All right, the top 3 districts in value are also top 3 districts in volume. All right, worst performance now in terms of reduction in volume is 21, 10, and 19. Okay. One thing to take note here, I did not highlight, if you can look here, is that East region, we also actually classify them by regions. If you're following my cursor, now Northeast region has always been the #1 district, okay, in terms of volume for the many, many years and quarters that we've analyzed. Now, for the first time ever, we've seen East region, okay, overtaking Northeast region as the #1 our most popular district in terms of transactions. Okay, and now 118 districts. 118 units. And this is the only region that actually posted a growth as well. Right. So what's happening to the East region? I will let my district ICs at the East region to share a few remarks. Okay, so before we go there, let's do another second quick poll, right? Among the regions, Central, West, East, and Northeast, can you share with us, Keith, are you ready? Can you share with us which region are you most interested in, whether you are buying or selling? So let's take a look. And I think my ICs are looking at the numbers as well. Let's see whether it reflects, I think, the transaction volume now quite clearly, very, very clearly. We have East region garnering about 50% of the votes, okay, followed by Northeast, right, West, and Central. Okay, as you can see, I think all these surveys don't lie. Every time we conduct the webinars like this, we try to understand where all of you come from or where all of you are interested in. Okay, so now we have 53%. Let me just screenshot this for a while, it'll be interesting to know. Then followed by that. Okay, so thank you, Keith. Now we can move on. Pardon me. Okay, so now let's go to the highlights in the various regions and this. Okay, before I start, I just want to again introduce, I have my entire team here. So later, each of them will cover the various regions and districts, right? Starting from Michael, Cindric, Will, Jason, and Sean and Justin. Okay, so the first to start, let's start from the East, since it is the most popular and most highly transacted region. All right, Jason, if you're ready.
Hi, yeah, good evening. I'm Jason here, taking care of D13 and D14. Yeah, thanks. I will share with you now more on the D13 first. Give me a minute. Up. Okay. Yeah, can you see my screen?
Yes.
Yes, okay. Yeah, let's go. Okay, so basically D13, what you see on the map, we cover Sinet Estate, MacPherson, as well as Brother Hut. These are the three areas. So these are the three main highlights that I like to share on this district. Yeah, basically, if you look at number one, we are looking at the trend of terraces transaction. Actually, we are seeing a lot of transaction doing like below 1,007 square feet. Yeah, see more transaction. Hold on, I might slide a bit jam. Okay, so you see that the terraces are actually compared to Q1 is 9 unit actually, and now
double.
Let me share. Double, it's almost double.
More than double.
Okay, so yeah, if you can see here, these are the so-called unit. Actually, land size below 1,007. Why we say that? I think a lot of them actually going to look into D13, into this smaller land. Therefore, I think, of course, the price. I think they're going into after the price of like between 2 to 3 million, that kind of thing, which is you can't find probably at this point of time with the landed price increasing. So second thing, we are going into the semi-D. As you can see on the District 13, if you look at the price, semi-D today price compared to Q1, there's a lot. The jump is 21%. So generally, we are seeing semi-D in District 13 crossing 5 million easily now. Yeah. Let me share with you more on the, yeah, these are some of the houses that was closed recently. Or generally, you see like Willow, Mulberry, these are all Sinet, and this is Brother. These are all so-called above 5 million. Especially you look at the new houses at Salim is 7.4 million. Yeah, so this is the trend right now for semi-D. Okay, give me a minute. The third highlights, we are looking at actually, as what Willie mentioned just now, we are seeing a lot of actually, especially terraces moving 1,007 PSF. So easily today we are looking at this district 1,700 PSF. So you probably can't find anything below that. Yeah. So let me see the slide. moving. Okay, these are just some of the houses above 1,007, senior estate mainly senior estate. So you can see that, yep. Okay, even some of them are actually terraces. Yeah, even some of them are just corner terrace. It also
Not necessarily just terraces.
Yep. Okay, I move on to District 14. So District 14, these are the three main areas in District 14, mainly the Geylang, Kembangan, and Eunos area. Majority of the transaction done was in Kembangan area. And today we are seeing also trend in Geylang area. One of the main reasons because Geylang, some of the district converted into commercial. Yep. Okay, let's move on to the let's move on to this terraces. The first highlight terraces, we are seeing price crossing 3.5 million as well. Okay. These are some of the examples. Yep. So mainly Lorong Marzuki and Geylang, these two units, you can see that only a single story is already selling actually 3.85. Only a single story. Yeah, the second one, we are seeing the second highlight, we are seeing a surge in transaction as compared to Q1. As you can see, it's almost more than how many percent? 233%. Yeah, that's a lot compared to Q1, only 3 and now it's 10. This is some of the examples. Close.
I believe a lot of this will be rebuilt, yes?
Yep, most of them. I think like Melayu will be one of them. Waranjin Park will be also one of them. Yeah, these are the small land that people is looking at with the price and likelihood to rebuild.
Yep.
The third highlights that I'd like to share is you can see today District 14, we are seeing price going above 4 million easily right now. Yeah, even terraces on the corner terrace is already 4 million. Bigger corner terrace. Yeah, you will see above 4 million. So this is quite common. Like you see Jalan Krang is actually corner terrace. It's already 4.3. Yeah, and you can see the other one. Hold on, my mouse is not. Okay, Lorong Saleh is already 5 point something. This is semi-D, and of course the other one is a new one, 5.7. Yeah. Okay, thanks. I'll pass this to District 15, my colleague, Justin.
Waiting for Justin, I think we can see something quite interesting. And 13, 14, especially 14, I think it's we always experience a lot of flow over from District 15 buyers. So I don't know, Justin, how are you feeling about a lot of the buyers going to 14 side?
Yes, it is. In fact, because of the District 15, they are good evening, everyone. Actually, I'm Justin. I'll be bringing, showing you some of the data and chart for District 15. In fact, what's really is brought up is actually quite true that because 15 price has gone up, I'm going to show you shortly that they're actually looking for alternate like District 14 or even District 16. For 15, actually, we for our own analysis purposes, we actually divided into 4 parts by the Tanjung Katong Road, Steel Road, and also Siplap Linear Park. So let's dive into the numbers. So I brought out some of the charts, interesting chart that I'm going to show you tonight. Let's first look at the semi-D, the brand new, especially the brand new semi-D renovated one. When I say renovated, it's because it's already fully built up, that they have already recorded a high PSF. And also, if you look at the chart at the bottom, the transaction volume has actually increased by 28%. So it shows that it's actually in high demand. Now, actually, what happened is the brand new semi-D in District 15 is very limited in stock. So if you want to know which are the available, you can go to your agents that invited you to the webinar tonight. So for the value, you can see it's actually inching up. Like for example, Siklap inching up to 6 million, even for Teluk Kurau as well. They are for Katong especially, it goes already across the 8 million mark. If you look at the total 23 transaction in Q2, half of it already is more than 6 million. This slide, I'm actually pulling out some of the transacted brand new semi-D in District 15. So as you can see for Jebet 2001 and the Marpetan, semi-D and Marpetan, they already transacted recorded at 2,008 to 3,000 PSF. Next, I'm going to show you for the terraces. Even for the terraces, we are seeing record price as well, because it's already crossed the 4 million mark in average. So I'm going to show you some of the transacted terraces in District 15. So as you can see, the 4 here, which I actually extracted out, they are the 4 record holders. As you can see, 2 of them are corner terrace, and 2 of them are actually, most of them are actually all built up fully. And hence, actually, buyers are more inclined to actually pay a premium for all these built-up renovated terraces. So moving on will be the next slide will be showing on the PSF per transaction. As you can see, 57 in quarter 2 2022, 57% of the transactions are actually more than 1,008. If you compare, bring you back to 2022, that this within the 2 years, the number of transactions actually ratio has really gone up from 22% to 57%. So these are the 3 house type they actually extracted out for you to have a look. So as you can see, the PSF are all above 2,000. Even the detached house at Katong side. So whether it will be going higher, I think is for us to find out more. Okay, that's all for me tonight. I'm going to pass on to my colleague Michael for District 16. Thank you.
Thank you, Justin. I think just last year we were saying that $3,000 per square feet is not going to come to the east side so soon, but less than half a year, we already seen multiple transactions. I think we ourselves are also responsible for transacting some of them. All right, now let's head over to Michael. All right, what are some of the 3 main highlights in these District 16? One of the attendants here have asked, why is it that D16's negative growth is a surprise? So maybe, Michael, you can help to address this as well, right? If you have more questions,
one of the first highlight here is that the standard Lucky Height area, as you can see here, one of the prime area for 2 reasons. For the last 2 quarters, is able to transact the highest price and the highest PSF. This is due to its location. Firstly, it is easily accessible from ECP. The land plot there are bigger and well spaced. And as you can see, the words say height, the houses there are on relatively high ground. Some of which has a very good view. Now, all these are attributes that actually helps to bring a higher price. And the other one, the intangible one, is the lucky, right? You have a lucky height, lucky rise, lucky view. Now, all these are luck, and that probably also another area where buyers look for it. You can see from the transaction here, 37 lucky height. It is highest transacted in quarter 2. The sales price, by the way, is higher than the asking price. And one of the contributing factors is that it's a mere 300 meters away from the Bayshore MRT coming up in 2024. With that kind of price, the PSF well above 2003. That's the first highlight. My second highlight that I will share with you is that semi-D transaction in quarter 2 has surpassed that of terrace houses. Traditionally, it's always terrace houses that is more than the semi-D. Now, what you see here is the 20 figures of the semi-D that was transacted. 2 factors. One is that more people want a bigger land, more space, work from home. And the other factor is affordability. Of the 20 transacted, almost half of it are 99-year lease. And for the price point of view, you can see that to own a semi-D, which is 99 years, it's only 2.8 or even 3 million. But to own a freehold, it costs as much as 1.5 to even 2 million different. So that's the reason why the demand for 99 years has gone up in District 16. And my last factor that I would like to share with you is that terrace houses, the price has gone up. As you can see, the average that in quarter 2 has gone up to 3,004, and over quarter 1, And if you want buy a terrace house in District 16, it costs a minimum of 3 million, right? Minimum, and there's no more 2 million plus type of terrace houses. In terms of value, you can see on the right-hand side, it's from 2004, it's gone down to 2006. That's the kind of value that you get. And for the last slide I have here, a transaction of a terrace house easily now can go up to even a 4 million mark. And on the right, as you can see, the PSF is well above the 2005 PSF that you saw on the last slide. So with that, I will pass over to my next colleague.
Thank you, Michael.
Thank you.
District 16 also has a very interesting mix because of the 99 years houses there as well. It has, compared to 14 and 15, the east side, it has the largest concentration of this 99-year houses. All right. So for some, I think to answer one of the things, it could be because of the higher concentration of a 99 years being sold that brings down the average PSF. Okay. All right, now let's go on to Northeast region, which is another important and popular region. So with this, we have Sean. Sean.
Thank you, Willie. Yeah, evening everyone. I'm Sean. I'm going to be covering quickly the important points for districts 19, 20, and 28. So Northeast for this quarter is very interesting, although we were short behind the East region, but a lot of things, actually, the key highlights I'll be going through. Right, so for District 19, 19 is mainly covered by Serangoon Gardens, the Greater Kovan, Charlton area, as well as Paya Lebar. Right, one of the main interesting things for District 19 is for Q2 itself, we've seen a significant drop in the number of transactions for terraces. But that being said, semi-detached and detached volume still remain quite robust. And in fact, there's a huge appetite still for larger detached. You can see in the chart also is that the quantum has actually jumped significantly, reflective of bigger lands. But that being said, also we are observing also the appetite for larger lands, of course, is also correlated to the lower PSF. So for lands like 8 million and above, the PSF definitely we see a big dip, all the more so because the number of detached transactions in this quarter is hovering around the low 5 transactions. All right, then for some of the examples for the larger detached, these are very significant land sizes, one being 12,000 plus square feet, the other one being 9,000 plus. These are transacting at weight almost close to 10 million and above. You'll be hovering now at the new norm, seems to be the 1,000 square PSF. Right, similarly for semi-detached, all right, we are recording new highs in terms of the quantum as well. So what used to be hovering below 5 million, now we are seeing increasingly across most of the areas, especially like Serangoon Gardens and even like areas like Paya Lebar, they are registering a value sale of above 5 million. Right, so that takes the average for the first time to be on the average above 5 million for semi-Ds. Right, some of the examples. Within this, there's one that is extremity, one being the Farleigh Avenue, not only having a very high value sold, the PSF or resale reaching the 2,000 PSF mark. All right, again, it's reflective of the appetite for those move-in conditions. Okay, moving on to the third distinctive point. Increasingly, you can see the ratio of the value. In fact, that more than 59% more increase number of transactions are breaching the 5 million marks. So this is again very reflective of the appetite for semi-Ds. Could be what we see a shortage in the supply as well. All right, so the above 5 million and also in this quarter, those that's above 8 million. Some examples will be this, some of the common transactions, even contributed by terraces. Some of them are already breaching the 5 million marks. These are obviously those built up ones. Okay, jumping quickly into District 20. District 20 will be also quite interesting. We actually see almost constant number of transactions in this area. However, there's a shift in the weight ratio. So we actually see terraces picking up steam, but also we see that the semi-Ds are actually trailing behind, almost about a 50% drop in terms of transacted volume. All right. So semi-Ds, again, what is conversely interesting is that although the volume has decreased, actually the PSF has been surpassing at an all-record high, some even up to 2008 for Thomson Reach areas, which remain more elusive due to the real shortage of supply in that area. Obviously, with the Thomson East Coast line, this is something that is to be desired. Okay, and also for terraces, although it's picking up steam, one thing to take note also is the popular areas would be Thomson Garden area and Sembawang Hills. But that being said, on the average, you see actually the average PSF for all the transacted terraces seems to be plateauing. So whether this trend will continue to rise or to stabilize, whether this is the new threshold. All right, and the last point for District 20 is we see a significant shift in terms of the average PSF. So anything that is below 1,004, 1,003, it seems that there's hardly any transactions transacting at this price. Even for some of the semi-Ds, those are breaking new transaction records above 1,008 PSF. All right, and last one for District 28. All right, District 28, again, this was going to be quite interesting. This region has, for the last quarter, did not perform so well in terms of the semi-detached and detached, because District 28, actually, we have a lot more bigger lands and typically their PSF is much lower. So in this quarter, the trends actually reverse back to the normal. We see actually a huge increase in appetite for semi-detached and especially for detached. So some of them being very big parcels of land being transacted. Right, and also for the larger detached, again, you can see there's even some transacted who are below 800 PSF. Again, District 28, relative to the other regions, here this area actually we see there's still quite a number of big lands going at still pretty attractive PSFs. All right, and lastly for the terraces. So for the first time for District 28, what actually surprised us is actually how quickly the value for terraces have risen over time. So one area to note is also for Cactus Sunrise area. What used to be 2.5, 2.6, 1.5 years ago, now we are looking at an average of 3.5 million. So similarly, other areas like the popular Seletar Hills and Begonia area are also following suit. Right, with that, I will hand over to Central.
Thank you, Sean. All the one go, all the three districts and Northeast area. I think you've seen also, I think thinking back really just 1 year, maybe 3 or 4 webinars ago, I think it's deja vu. We were just talking about whether semi-Ds in District 19 will hit 6 million. All right. Just this quarter, you've seen Serangoon Gardens area hitting a 6 million. I also hope I think the audience also appreciate how we dissect the information, not just by districts, but even within the different sub-districts. Those gives very important and distinctive characteristics as well. Yeah. So now we hand over to Central Region with Will, sharing with us District 10 and 11.
Thank you, Willie. Okay, let me dive into more detail for D10. The Central Region. So here are the 3 main highlights. So actually we divided the area into 5 different sectors, as shown in the map here. Okay, for this slide 1, we will show you the highest demand for semi-D for this quarter, Q2. So basically you can see there's a big increase of demand for semi-D as well as the PSF on the rise as well. So total, there's probably a value has actually increased by about up more than 10%. Yeah. So, okay. So moving forward, these are some of the semi-D that's been sold. So for brand new semi-D, you can see that actually hover within the 3,000 mark for that. This 25 mile Sinai index actually been transacted. So across the 3,000 mark, where those bigger plot of semi-D land with 4,000 in term of land size has transacted at $2,211 PSF. Okay, so this is a bigger land, but yet crossing the $2,200. So on the average, you will see there's 61% of the house type that actually hover over the $2,000 square foot. So this one stands about a good 61%. So, and moving forward, we have the GCB for the District 10. Not much of the GCB was sold recently with the land size of 1,400 square meter. But again, you can see we have 3 pieces of land that's being sold recently. So the highest PSF is around the $2,100, over the $2,100 mark, and the lowest you are looking at somewhere about 1,548. Yeah, so make an average of average PSF at 1,009. So these are some of the GCVs that are being sold, of which 2 are on a better location. Your Jalan Harum and Kingsmead on a better location, whereas this 8 Holland Heights at the back of the house is actually the main Queensway stretch of road. So the price tends to be a bit lower. The PSF tends to be lower too. So moving forward to D11, District 11. So District 11, again, we have actually divided the place into 4 different sectors: the Swiss Club, Danian, and Novena, as well as the others. So we head in and dive into more info. So as you can see, this is the transacted price or value. So for average inter-terrace, we are looking at somewhere about 5.7 onwards. Yeah, with a PSF of average PSF of 2,919 square feet. So couple of houses to highlight. So you can see most of the houses has hovered across the 5 mil mark, and of course, just to let you know, the lowest PSF for 11 Jalan Seni has transacted across the $2,800 PSF, whereas the rest hover around 3K PSF. And of course, the brand new house type that is being sold at also at record PSF. So actually, quite a fair bit of houses unit was actually transact across $3 PSF houses. So includes the terrace at Camborne, Greenmed, which is the semi-D, as well as the smaller plot of semi-D at University Road. All has transact averagely at $3,300. So we can see there's a strong demand in GCB in D11, mainly because D11 has more stock compared to D10, and price are also much more comparable. It's much more palatable in a sense. Yep. So here you can see the big number of so on the average side, you can see there's an increase of close to 5% in terms of value or the price, and these are the GCB that sold. And of course, a bigger plot of land over at Andrew, which is the less, I would say, not so popular ones, has actually transacted at $1,225 PSF, whereas other places have GCB transact across. You can see the price is all relatively high, and those that is nicely built, like for example, this 6 Ash Grove has hovered about $2,500 per PSF for GCB. Yep. So right now I'll hand over it to my colleague Cindric to bring you more insight for D21 and D23.
Yeah, thank you, Will. I think one interesting to take note is for GCBs now, a lot of interest was crossed to District 11. Just not to mislead people, I think one reason, that's not because it's District 10, there's no goods on sale, but is that there's a supply of District 10, a lot have basically been absorbed last year. So leaving more on the District 11 houses for GCBs. But whether this remains to be changed in the next 6 months, we shall see. Right now, let's go to to the West region, and we have our district champion there, Cindric, to share with us.
Thanks, Willie. Hi, I'm Cindric, and I'll be going through with you this D21 first. Here are the 3 main highlights. Okay, first, the map. We have subcategorized the area to 4 different subzones. Okay, Jurong Kechil Toi, Upper Danian, as well as Sunset. Right. First highlight we want to point out is the almost new terrace houses at D21. Surprisingly, they are actually inching towards 3,000 per square foot already. Two of the examples here are this Engkong Terrace development. These are fairly new, just about completed 4 years ago, 2018. And already, as you can see, the per square foot highlighted is about 2008 to 2009. This is what I call a bit of spillover effect, because as Will has highlighted earlier, for the central region, because the entry level for central region, if you want to buy a minimally terrace house, you have to have a budget of at least 5 million above. So for this, even though PSF is high, but the quantum is still below 5 million. So therefore, people are still willing to splurge on it. All right. So this is the first highlight. The second is for semi-Ds, they're in D21, they're actually reaching record high prices as well. As you can see over here, Jurong Kechil, the average per square foot is touching 2,000. Upper Danyan, the average price for semi-D is already crossed 6 million. And the overall average semi-D per square foot is already about 1,007 PSF. Okay, so here are the some of the units examples we can show to you. 9 Hinhai Place is was sold for 2.3, and then Huaguan area across 2,000. Okay, as well as Greenbank Park, which those who are familiar with the locations, it's not everybody's cup of tea because it's very deep in, far away from the main road, and yet it's transacted at almost 2,005 PSF, and of course Upper Bukit Timah view as well. Okay. Next, okay, so the third highlight for D21 would be, if you notice, almost 50% of the transactions were transacted above 1,008 per square feet. So more than 1,008. So yeah, so of all the transaction this quarter, last quarter, I beg your pardon, yeah, about 50% crossed the $1,008 mark. Some of the examples are highlighted here. Engkong Terrace, the one that we mentioned earlier, the fairly new 4-year-old terrace. Huaguan area, very popular because it's Upper Danyan location. And then 9 Hinhai Place, and surprisingly 58 Binjai Park, being a GCB, big plot, and yet the PSF was above 1,008 per square foot. So these are the 3 highlights I have for you for D21. Next, let's move on to D23. Okay, D23, it's quite sporadic all over the place. We have the Burgundy and Verde are the 99 years, and then the others as well are the 99-year leasehold property, which we'll highlight later on. We have the popular location, of course, for D23, it's the Chestnut area, and then we have the Choa Chu Kang area and the Hillview area. Okay, so the first highlight is the short remaining lease houses are actually still selling, and these remaining lease houses are the one classified under the subzone we called others just now in the map. Okay, so for some people who do not mind houses that are not just like probably 20 plus years left, they perhaps maybe do not have a big budget, they can, a semi-D of 2,000 plus square foot can actually be had for about below $1 million, below 800,000 as a matter of fact, $755,000, and the PSF is unheard of. It's between 200 plus to 300 plus per square foot. Of course, in today's market, anywhere else in Singapore, the normal 99-year leasehold per square foot is easily 1,000 plus, above 1,000. So to have a PSF that's below 500 even is unheard of. But of course, yeah, there's a reason why. The catch is the lease is down to just 20 plus years, and the detached house can be had for below below 1.7 mil for a good sizable detached house of about 5,000 plus square feet. Okay, these are some of the examples. Remaining years of lease, as highlighted above, is 24 years. So 3 Jalan Siap. Okay, the detached house, yeah, so price 1.6 plus, PSF 200 plus. 5 Jalan Uji, okay, a fairly good condition house, renovated before, and it's 5,000 plus square feet, and it was only sold for 1.7. Okay, and then the semi-Ds are for 760,000 and 750,000, cheaper than HDB. Okay, now the second highlight is that the average 99-year leasehold prices. These are the other normal 99-year leasehold. They have actually crossed 1,000 PSF for D23. Okay, so just 1 quarter difference. Previous quarter you still can find the average is about 900 plus. Now this quarter is really cost 1,000 per square foot. Some of the examples are the Almond Crescent, this Interterrace at 1,003, and then the Verde View. Okay, very common 99-year leasehold location. 1,001 plus per square foot. All right, and the third highlight I have for you for D23 is a 1/3 of the freehold and 999-year leasehold houses were transacted within 1.1 to 1.2K PSF, 1,001 to 1,002 PSF. Now, for people who who are like bargain hunters, or they want to buy something that's reasonably priced, they don't want to compromise on the size, and they don't want to compromise on the lease, they want freehold and 999, then D23 is the location to look for. And those, of course, that do not want to move too far away from the central region, all the way to the east or the north, then D23 is where they will come hunting for houses. Of course, these naturally are the older houses that they're prepared to put in a bit more cost in renovation, but yet they're freehold or 999, and you can get houses at semi-D, corner terrace, or freehold at reasonably priced per square foot, 1,001 to 1,002. Terrace, semi-Ds is highlighted from this various locations. All right, so that's all I have for you for D23. I shall yield the time back to Willie.
Thank you, Cindric. So let me share the screen. Based on what you said just now, I think a lot of buyers will come looking for Cindric, yes, going to District 23. Indeed, I think 1,001 to 1,002 for freehold now, really hard to find, right? Especially when your 99 years have crossed basically the $1,000 PSF mark. Okay, I hope all of you have had a very good understanding. No doubt, I think every district, due to time constraint, we can only, painfully, the word I would say is painfully selected 3 top findings. Of course, if you want more, you can always go to Huttons Landed Consultant for more information. Right. So let's now come to the main topic for today. I know we are running a bit short of time. Let me try to do this as fast as I can. We are now talking about not just price per se, not just volume increase, decrease, or price. All right. We're talking about this phenomenon of this power balance between buyers and sellers. Right. Before I continue, I don't know how much you understand about this, but let's do a quick poll first. What do you think? All right, who do you think have more power in the landed market? Right? Is it buyers? Is it sellers? Equal power. Okay, let's have 10 seconds. I hope you understand what I meant by power. Power could mean basically a power of bargaining, of position, of negotiation. All right, in terms of not just the price. Later I'll explain to you at time. In terms of asking almost everything in a transaction. All right, it's not just about seller saying, I want this price, but I want this timing, I want this condition, so on and so forth as well. Okay, so we have about 70% thinking that it's still the seller's market. Okay, sellers has more power. 12% actually, interestingly, think is buyers, and we have 18% who think both have equal power. All right, that's interesting. Okay, we can end the poll. Thank you, Keith. It's about 17, 18, and 12. Okay, so let us take a look and let us tell you how we feel. Okay, after observing the market for so many years. Okay, let me just close this first. Now, the balance of seller buyer power. Let's take a look in the last 12 years. Okay, this is an average price chart for the landed market in the last 12 years, which can be simplified. Okay, into 4 different waves. I know whenever you see this chart, you will see the ABSD, number of ABSD lines and stuff. We simplify this further, especially in the landed market. Okay, there is basically the pre-ABSD, which is 2013, not cooling measure, I'm talking about ABSD, all right? Cooling measure started as early as like 2009, not 10. So this is the pre-ABSD, the 7% ABSD. Then there's the post-ABSD, there's on-block wave, right? 2000, this 2 to 3 years. And then we have that COVID pandemic wave, okay? So you see here in the red periods, I am not sure if you were in the market then, but my team and I definitely have been, and I can tell you then is definitely the seller's market. This is reflected not just by prices, the increase in prices, right, but in terms of what we feel or what we witness in terms of the amount of power that a seller has, all right, over, I think, the buyers. So let's talk about the most recent period, all right, which is the COVID phase, which is the last 2 years. We have seen prices going up phenomenally, not just for landed, but for condos and HDBs. So I think quite a lot of you here are actually first-time landed buyers or to-be buyers, and you are in the midst of thinking of selling your condo. You will also then enjoy, all right, this seller's market phenomenon. So what is this phenomenon? Let's take a closer look, okay? So if the seller having more power, all right, during the COVID phase, firstly is the favorable social climate. All of us have seen, witnessed, a lot of people, COVID has led to a demand for more space. Okay, everybody wants to upgrade. And at the same time, we also have very favorable economic climate, low interest rates, the stock market was booming, crypto, etc., etc. Okay, so then you literally have a lot more, and the word here is a lot more in the last 2 years, more buyers than the listings, which therefore give the power. You realize this is, by the way, inverse. The more quantity there are, the less power you have. In those last 2 years, there's more buyers, significantly more buyers than sellers, and sellers have a lot more bargaining power in terms of pricing, in terms of timing, in terms of, you know, like when you want to move out, can you have rent-free period after staying, etc. If you're now in a as a buyer and you've been looking at some houses now and trying to negotiate, you will totally understand what I have just explained. Okay, so how about the other periods like the post-ABSD? Okay, we have also been through this painful period. Okay, but by the way, for us, we realtors, agents, we stand in the middle. Whether it's a seller's market or buyer's market, there's some form of pain. Okay, because the transaction takes two hands to clap. All right. So in a buyer's market, we felt the pain as well, especially you're representing sellers. That's when actually the reverse comes true, which is you have more listings than buyers. Every listing you may have to, instead of viewing 10 to 20 times, you may need to see it 30 to 50 times, right, before it's being sold, because there are just so many, like whether it's terrace or semis around for every buyer that exists. Okay, so you have to entertain a lot more buyers or viewers. So the listings take longer time to sell, and after a while, it will result in lower prices. Okay, as the sellers feel a bigger pressure to reduce their prices in order for the house to sell. Okay, now what is interesting then is, of course, question mark is what is going to happen? Okay, what is going to happen after this 6 months in 2023 and beyond? Of course, nobody has the crystal ball, but what we are now again trying to attempt to predict is to better understand this first. What do you think is going to happen in the next 6 months or so? First is this depleting COVID effect demand, right? Depleting COVID effect demand, which we have already seen in the last 3 quarters. How do we say that? Let's take a look at the quarterly trends in the last 10 years, okay? We've split up the volume trends, price, and from annual to quarterly to give you a better understanding. And if you can see here before I do the marks, okay, they're all, you see, let's focus on all the red bars. The red bars are basically decline in volume, okay, decline in volume. So quite consistently, when you have a decline in a transaction volume, especially more than 2 consecutive quarters, you will have a downward pressure, as shown in the last, this is a 10-year cycle, all right, last 10-year cycles. And we have now 3 consecutive decline in the transaction volume. Will there be a downward pressure on price? Okay, will there be a downward pressure on price? I don't think we need to be an analyst for us to know. I think the answer is quite clear. All right. Not only that, if we were to take a look at the last 3 quarters, I think if you're in the market, if you're not familiar with the market, all right, it'll be interesting for you to know there's this thing called seasonality, right? Seasonality to both buyers, sellers, and especially to us realtors. Quarter 2, as you can see, has always been, quarter 2 and 3 has always been the peak, okay, constituting 55, if not up to almost 58, if not 60% of the entire year's volume. All right, especially quarter 2, because quarter 1 is usually quite slow because of Chinese New Year, because of festivities. Q2 is almost always an increase as seen in the last 10 years, except for 2020. That's because that's when it's the first outbreak of COVID and we had our first lockdown. With that particular exception, the rest are not just growth, but double volume growth. All right. So 2022, this year, is the first time in the last 10 years where quarter 2 actually reflects a decline, right, in transaction volume. So with this two, okay, almost unprecedented, spells a decline in demand. You cannot run away from that. We are in the market every week. We represent both buyers and sellers. We can already feel that even some of the what you call hot listings are actually receiving less calls than before. All right. So sellers, if you are out here listening, I hope this is one thing. And if you are receiving less inquiries, you're seeing less activities from your agents. This should not be surprising to you. Now, the next 3 things, I won't go into detail because we mentioned this many, many times. It's about rising interest rates, global recession rules is in the markets for the past 2 to 3 months. And what is the question mark here is about Singapore's resilience, right? Despite a lot of negative negative external factors, I think Singapore's property has proven its resilience in the last many months across all property types. Okay, these are some of the headlines they probably have seen. Can you see the resilience and the stubbornness of Singapore market? Rising interest rates, worldwide, everyone is affected. Even China was affected, all right? But Singapore market somehow has proven to be resilient and is expected to be resilient as well, all right? Etc., etc. Okay, now interest rate hitting at 3.08. Do we see a decline? People sitting and wait? Yes, definitely. Does that mean that volume is going to drop? For sure. This we don't know yet. All right. So this, to better understand this, how we feel it's not going to go into a decline into the buyer's market straight away. All right. So the answer to this balance of power is that it's not going to go into a buyer's market straight away. In fact, in the next 3 to 6 months, we do not believe that it will soon become a buyer's market. Oh, the price is going to drop, etc. Right? What it's going to go into is this interesting phase called, okay, the yellow part, which is we call this a more or less balanced market. All right, indicated firstly in the 2019 to 2000, year 2000, where nothing much seems to be happening. We have almost equal number of buyers and sellers, etc., and almost a bit of the 2014 and 15 transition. Right, this is the period is post ABSD. After 1 year of getting used to it, some of the buyers starting to come out, etc. So understanding or remembering what happened then in the last two periods of balanced market, this is what we predict is going to happen, and our advice as well. All right, in the next 3 to 6 months. So in the balanced seller, seller to buyer market, what we're going to see for sellers, if you are a seller, you're going to see more competition, all right, among other sellers and more among other sellers and also among more sellers. What we mean by this, if you have the same number of sellers, some sellers are going to get more competitive because their houses are in the market for a longer period of time. And at the same time, more competitors are going to enter the market, all right, because the price is still at all-time high. You're going to get less inquiries, viewings, and offers. This will be natural. Right, your marketing campaign also has to be reviewed and improved. If you're selling your house now and all is being done to market the property, is like Property Guru, for example, you may need to review because your house will not be the only one that's going to be on a let's say online Property Guru. Okay, if you are buyers, okay, on the more positive side, if it seems that there are more buyers than sellers in this webinar, is that soon you may have, okay, likely to have more choices of houses to shortlist. As we speak just now, I don't know whether this client is here. Jasmine, I'm not sure if you are here. I just got a text from another seller coming to me to say they want to sell their house. I want to exit the market fast. Okay, so this won't be the only owner that will think of exiting the market. More and more sellers will start to enter the market. All right. There's more information provided in the marketing campaign. That means as buyers, you should not just expect just, again, maybe I use property grid as an example, just price and some photos. You can expect there'll be more competition among the agents providing more information. You can ask for a 3D tour. You can ask for what do you call this, a floor plans, 3D immersive tour, sorry, I mentioned earlier, etc. Okay, and you therefore don't have to be rushed into making decisions, which I know the last 2 years have been plaguing the buyers community, right? Some you can't even view without giving a check. Can you imagine? All right. So soon you will have more time to evaluate on options and to make decisions. Does this sound more balanced to you between buyers and sellers? We've been through that. And to us, it's the happiest period in that sense for us realtors sitting in the middle, because then we can have more fair competition, so to speak. Okay, so pardon me. Okay, so let me go back one more slide. Okay, so what is then important? All right, is still what doesn't change is the matching of expectations between buyers and sellers. Okay, sellers regarding your house towards the kind of relative competitiveness, and buyers, of course, towards what kind of house you like. Hitting this match, okay, three things becomes even more important. All right, for both buyers and sellers. And they are suitability, affordability, and desirability. Actually, for every house, there are about between 15 to 20 factors. If you ask any of my teammates in our, just now you saw some fact sheets, right? There are easily 14 to 18, if not 20 factors, but I'm going to lump them up into three main so-called groups of criteria: suitability, affordability, and desirability. That means as a seller, you need to know about your house relative suitability, relative affordability, and relative desirability. Of course, for buyers, you know what you want, but at the same time, I hope this helps you to better prioritize. Okay, so suitability will be about, for example, the location, buying a house based on schools, amenities, the layout, whether it fits your family's needs, etc. Okay, I'll give you an example. Okay, at a market like today, if you have a house, for example, this a house that we just sold recently, and Duku Road is within 1 kilometer to a Tao Nan school. All right, suitability to this buyer who eventually bought the house is just about Tao Nan, within 1 kilometer to Tao Nan. All right, this slide, can you see the high PSF and high quantum? It doesn't matter, because if it's not within Tao Nan, I don't buy. All right, so does your house also fulfill the suitability of many other similar buyers? Schools, amenities, lift, etc. Okay, another point to take note is affordability. Now, affordability is not just about the overall, it's not just about the overall quantum. Okay, overall quantum means it's not just the house price, but also the renovation price. You can buy a house that's quite affordable, let's say a terrace. Just now we saw, maybe you buy at 3.2 instead of 3.5, but then you have to put in $500,000 in. So affordability has to take into account both house and rental, as a relative house for based house type, PSF, etc. Okay, I'll give an example. This is a semi-D we just sold. By the way, the examples I'm going to show you are houses that we just sold in the last 2 weeks, by the way, as current as it is. Okay, this is a semi-D at Serangoon Gardens at 5.321464. Now, this is to the buyer, of course, besides other qualitative attributes of the house, this is a affordable quantum in terms of both a price point, because to buy a semi-D that is 2.5 stories with 3,006 land at under 5.5 million, that's considered quite attractive quantum. And at the same time, the PSF is also considered not exorbitant as well. All right, saturates variables. Of course, there are other factors that comes within the buyer's consideration. Okay, so if your house falls into an attractive affordability quotient, then your chances of selling will be higher. Next will be desirability. Right, desirability is a bit more emotional. It could be about the address. It could be about the condition and the design of the house, whether it has a pool, etc., etc. Okay, so again, we've just sold a brand new house. Okay, this is a brand new house at Carmen Street. Again, if you're just going to look at just the price or affordability, it may not be affordable for many people, because a semi-D at 7.3 million, that's obviously quite a record breaking quantum, and also the PSF. But to this buyer is the desirability to own something that's brand new. And if you see the design here, its design is unlike many new houses, even among the many new houses we are selling. Plus, this is also in a very desirable part of the East Coast, if not the Siglap area. All right. So do your house fits into or fulfill these three main criteria that is sought after by buyers? I think this is the big question that we have. Your house may be, for example, you can afford to ask for 3,000 plus PSM like this, but is it a suitable house? Does it fulfill desirability? Is it also affordability quantum as well, for example? Okay, there are many factors that come into play. Okay, now with this, I'm also going to introduce this ABC model, which I think all my teammates at Huttons Landed Division already know. This is almost like an internal code, all right? So very simple to see where your house falls. Are you A or B or C? This is a simple matrix to show you. Basically, houses, listings available in the market could be A, B, or C, simply put. If it's a C listing, okay, this one shows the duration to sell, all right? And this is a number of houses. In the general market, there's always more C listings than A listings. Is normal, all right? It's normal. So this reflects the quantity of listing. C listing means you take a longer duration to sell. You know, internal expectation could take 9 months to 12 months instead of a usual like A listing 1 to 3 months, or B will be like 3 to 6. Okay. So up here will be the quality of the listings based on suitability, affordability, and desirability. Now, in a balanced seller-buyer market, this becomes very important because you have to really wait, because the importance of how you stand versus your competitors will become a lot more pronounced. That means the differentiation between A, B, and C listings will become much more obvious. All right. That means if you're A before, like for example, in the last 2 years, whether you're B or C listing, for example, there are a lot of buyers who will still call up because there's just a shortage. All right. Because there's just a lot more buyers. But when it comes to more balance, the buyers will be able to see, hey, I think this is not as good as, you know, the other house they've just seen in terms of either price or in terms of suitability, etc. It will become more and more obvious. Okay, because buyers have more time. They'll need to call up and see every semi-detached, every detached that enters the market. Right? When this becomes more obvious, it means that the balance of power between buyers and sellers will be shifted, will be leveled. So whether you're a buyer or a seller, especially if you're a seller, you need to start to be more aware, all right, where your house fits into. Gone are the times, I can almost safely say, 1 more quarter we shall see, where you can call the shots sky-high price and expect this to still be sold or have viewings, for example. Okay? So with this, I hope this is clear. Let me sum up with the final advice. For buyers and sellers in the next 3 to 6 months. Why I lump 3 to 6? Because we think that the next 3 to 6 months will be quite muted and will have a similar trend. Now, buyers, if you can afford to wait and monitor, all right, if you can afford, that means you have not sold your place yet. My advice to you is wait, all right, just wait first. Right, if you cannot wait because you have sold your place, wait not work indefinitely because the market moves quite fast. And wait maybe just for maybe 3 months or so, or call any of us to see what are some of the houses that's available or whether things are moving. All right, but generally, I think the market is going to turn a bit to the leveling part. You wait. If you really cannot wait, you already sold your place. There's a need for you to upgrade, for instance. The supply of, just take note, the supply of choices is unlikely to increase drastically so quickly. Okay, not because after what I said today, a lot of sellers will start to put their house onto the market. It will increase, we believe, but not so drastically. So if you have, within the limited options that you have, found what you like, is within your affordability and you're planning to stay for the long haul, anything that's for the long haul tends to even out all the negativities, for instance, or the concerns. Don't hesitate to make the purchase because it's very difficult. Still landed is still very, very rare. To find a house that you like is a lot more difficult than finding a HDB or condo. Okay, so if you finally found something that fulfills all the three, go ahead. Okay, the caution is, remember to factor in the renovation or the redevelopment costs. All right, to compare if the total cost of that moving house is reasonable. So that is, you're not going to be shortchanged or feel that you're actually overpriced eventually. Next, sellers. First, word of advice to sellers, the word is be more aware. All right, be more aware, start to be more aware of your house relative A, B, C positioning. All right, especially sometimes when you have what we call a deal breaker qualities, for example. Either is it not just a simple west sun facing, but the numbers or whatever. Sometimes maybe it's facing certain things or it's noisy, whatever. As it becomes more balanced, you realize some buyers don't need to compromise. They don't need to compromise. Oh, I need to, because there's the only house available, I don't mind being noisy, I don't mind having west sun, whatever. Be aware, all right? If you want to study the market, you can go online and see what the houses available, all right? Although it's not as clear, you can, again, go to your preferred lender consultant, ask them for the specific address of your competitors, okay, who are marketing. If you're selling 8 million semi-D now in District 10, how are you positioned? Please go and ask the relevant lender consultant. Where are all the 8 million semi-Ds? Show me. I want to know. How? Let them be aware. Are you in a better position or not? Okay. Be also more patient in the sale duration because it's going to get slower from now on. At the same time, I mentioned earlier, take this time to also think of how you can improve the effectiveness in your marketing strategies, okay, delivered by your agents or yourself, right? So that your house becomes more competitive. Because sometimes whether a house gets sold or not is about awareness, whether it reaches out to the right people, or whether the inherent or not so obvious values or qualities of the house has been communicated in more creative ways, for example, okay, such as video, such as 3D virtual tours, even now, like what my team is doing, we're doing virtual reality staging and redevelopment proposals, okay? Also become more realistic, the target sale price. If after 3-6 months, you can just follow increase if you want to. If you're really serious about selling, the word is realistic. I'm not asking you to definitely drop it, all right? Doesn't have to drop, but if you start to monitor, become more aware, realize, hey, your buyers are not blind. They can see why is your house asking 10% higher than the next most realistic house. When your house is a 2-story house versus a 2.5-story or 3-story house is being sold, okay? You cannot just look at PSF or land size, for instance, okay? Because more owners will enter the market. They will create competition for you. Right? Because right now, if you do so, exiting, we are still at the highest point of the market. Okay, they're still at the highest point. If you don't reach 2,002 per square feet, if you sell at 2,001 per square feet, for example, isn't that still a gain, right? Versus, let's not forget your holding period, right? You bought it for many years. So this will still be something that is, that I will advise, that's still wise and logical. Sell at the highest point first, you can wait and decide what you have to do after that. Okay, rather than holding on to it for a price that will never come or may not come in the short term. This is, by the way, especially so if you are also sellers. After selling, you have other plans, and that plan also involves a landed property. All right, you're also thinking of selling a semi to buy a detached house, for example. All right, so you may have to wait. What is the opportunity cost of waiting in the long run? For example, the price is going to drop. Okay, the price is going to drop, and you're upgrading. I will wait. Right? If I'm going to sell 8 million semi to buy a 12 million detached house, I will wait. My 8 million to become, let's say, 7.5. Fine, I lose $500,000, but the 12 million may become 11 million, for example. I may gain, say, $1 million from there, for example, if you are upgrading. But if you are downsizing, it might be the reverse. Okay? All right, so the caution is older houses whose sellability has already been affected by all-time high construction and labor costs, okay, and rental prices may risk being left on the shelf for a longer time. For those who have been searching in the market since last year to this year, you have probably already seen that last year, a lot of the better houses, renovated, all this are taken. So left behind, so-called, this year, a lot are actually more original conditions that require a lot more effort. And strangely, or maybe because the market is supporting them, they're still asking similar prices as the renovated ones. Okay, so if your houses are already affected, your neighbors are being sold. How come every month there are some 10 or 11, just now we were saying, yours has been in the market for 6 to 9 months. I think it's time to reflect, right? Okay. Thank you so much. With this, we shall end the webinar because it's getting quite late. It's 1:30. So on behalf of the team, we thank you, and we shall see you in the next upcoming webinar, if not on the ground. All right. Thank you so much. Bye-bye.